Give me a sense of how you're reading AMCON's impact on the market, because for me, one of the things that stands out is the point that the AMCON CEO did make today, that they would be holding margin loans for at least 2 years.
Okay, thank you. Well, going by what has happened today alone, is glaring that what is going to happen is going to trigger a rally in the prices of these rescued banks. Looking at the impact of the news on the market alone today, where the market did 258 basis point upside, it tells you that it's a good news for the market. What AMCON has said is that they are going to buy off the assets, the bad assets that are collateralized by loan, that's the margin loans that are collateralized by shares, at the rate of 60% premium to the 60-day average, counting from November 15 backward. Right. So that tells you that if you factor what is likely going to happen, it's going to be at a premium to the price in which it is trading now. So that tells you that it's just a matter of time that the market will tend to adjust to value those shares at par at what AMCON is willing to buy those shares. So it's likely that we begin to see rally in prices of the bank shares.
But even beyond the rescued banks, today we still saw declared banks rise significantly. Yes. And obviously it's based on the expectations that these banks will report significant increases in profit because of the room that AMCON has given for banks to exchange margin loans at a 60% premium to their current valuation, isn't it?
That's correct. Why is that? Not only the rescue bank have exposure to the margin market, both the healthy bank, the rescued banks, all of them have exposure to the market. But what AMCON has said today will actually impact on both the rescued and the healthy banks, in the sense that at each point in time when CBN comes for examination of your books, you need to mark to market all the assets you have on your books that are backed by collateral. Now, for the margin loans, each point when they come to check your books, you need to mark to market with the price at which those shares are selling in the market. And if there has been diminution in asset value, then you have to take that provision. So you find that even rescued banks, let's take First Bank for instance, took like diminution in asset value of like 5 billion for net Q3 alone in 2010. So you find that even the rescued banks, still under this market condition, will still take diminution, will take charge for diminution in asset value. But since they've taken the charge and AMCON is willing to buy at the premium to the price that is being marked to market now, that creates like an added money, fund for them at the end of the year, which come in like extraordinary items, which will be booked to profit for the end of the year.
So that's really what is attracting investors.
Correct.
But which banks in particular do you think are likely to benefit with where we are today? Because we know, obviously we know all, but benefit the most in terms of which banks perhaps have the highest margin exposures. Looking at the banks that you cover right now, which ones do you anticipate will benefit the most?
Well, it depends, because when you say highest exposure to margin in absolute term,
relative to their
total loan.
Yeah.
Well, I think it depends on if the banks too are even willing. Let's not forget that this is not by compulsion. If AMCON is saying, I've opened the window for you to give me your bad assets, it's not going to come and take it by force. You have to willingly saying, oh, okay, AMCON, these are the bad assets that I'm willing to sell. So as of now, we don't know which bank will come out. But overall, the window has been open for all the banks. We know that all the banks had exposure to the margin market. Of September ending, they've been mandated by CBN to actually close down that exposure to maximum of 10% of the loan book. So definitely we know that approximately between 7.5 to 10% of the industry loan book is still exposed to the margin market. And going by the figure that AMCON is giving us, that both the margin and non-margin is close to 2.2 trillion. Then that tells us that there's still a large chunk of money in that market within both the LD and the rescue bank. But now the onus relies on either of the banks, both the rescued or the healthy banks, to say, I want to surrender this asset to AMCON and take advantage of the window.
Many banks would take advantage of it.
Of course, yes, obviously.
And we'll see how that plays out. Thanks so much for joining.